Master your emotions, master your risk smart, win big.
What's up everybody, welcome back to RoyalBluFX. In today's video, we're going to talk about how to master supply and demand trading alongside with spotting high probability setups instantly. So let's begin with this video.
All right, so here's how to find the high probability setups. So first things first, what we always do here at RoyalBluFX is we always look at structure. In the market, we identify three types of structures. That means there's major structure, sub and minor structure, and microstructure. In order to find out the high probability setups, we always need to be one structure away from the previous structure. So what does that mean? So for example, if we have microstructure, right, and sub and minor structure, if I'm looking at the market, we need to be looking at sub and microstructure to be trading away from microstructure. Same thing goes for major structure. Okay, if we're wanting to trade major structure, we have to understand where the sub and minor structure is. That's what the market is trying to do. It's always trying to go to where the main structure is, okay, because everything internally is liquidity. So for example, if you take a look at let's just take a look at, for example, major and sub and minor. Okay, so for example, if I want to be trading major structure, I have to understand that sub and minor structure is the liquidity for the major structure. Same thing goes for the microstructure. If we're looking to actually trade sub and minor structure, we understand that the microstructure is the liquidity for the sub and minor. If you guys don't fully understand what I'm saying, I'm going to take you right now to the charts, and so I can show you a little more in full detail. Okay, so let's talk about it here. So for example, let's picture this is a major structure, right? Major high coming in. Okay, we have price coming in, something like this, and then this is your microstructure, right? Price takes out the liquidity, comes in. Here's your sub and minor structure, right? Price comes in full, right, and then comes right back up here then to continue. Now there's three types of structures that's happening in this diagram here that I drew up. Okay, so bear here with me. I want you to understand here that from the very high here, this is your major high and your major low is here, right? Now in order to understand how to draw, say, the structure, you have to understand how to create a range. Okay, how to create a range between a high and a low, right? And that essentially has a lot to do with price breaking a low, right? An old low like this, right? It's essentially a chalk or a change of character from one side to another, meaning that from the supply perspective, from this high here, this would be supply, right? And right here would be demand. So in order for us to create a range, we need to understand that price needs to break a low, right? To then continue bearish, right? And then we are expecting quite the opposite from the demand's perspective. If demand is taken over here, right, going bullish, you can see that there is a change of character happening in here as well, just like this. Okay, so now we've created a range, which means we have a structure high and a structure low on a major high and a major low perspective. Okay, so inside the major high and major low, we have two more types of structures. We have what's called the microstructure, okay, which is right there. Why is this considered the microstructure? Because we understand that when price went up to engulf the microstructure, it also mitigated, or so we think, right? Because there can be more than one mitigation. Always. This is just one mitigation, right, from the substructure, right? It mitigated the supply zone, right, and then pushed price bearish, right? Then now after price pushed bearish, we broke the microstructure, or at least liquidity, right? Price retraces back to what is it, to where? Back to your sub high, right? Because now this is the sub high. This is your high probability setup, which means that from this high to this low, we're looking for price to retrace back to the sub high, right? We understand this is the sub high because the sub high structure, sub high and sub low, belong to the major high. Okay, so if the sub high and sub low belongs to the major high, that means that this is the next area for people to come and sell from. Okay, that means that whenever people are selling here, what's happening above here? There's liquidity creation, right? Like the microstructure right over here, right? Like the microstructure, there is liquidity creation right here as well. So what do we expect? Well, you can continue playing the substructure, right? Because a lot of times when people are selling here and then selling here, a lot of other traders are going to try and sell here as well, right? But the idea here is to understand that not every supply and demand can always hold. It can never always hold, right? Eventually, price will have to sweep the highs or the lows in order to continue bearish or bullish, right? So in this case, we understand that this is still the sub high, the major high. Price goes above the sub high here, or above the sub-high structure, sweeps it, again mitigates this major supply zone right here, just like this, and then continues bearish, right? So there were three types of structures that happen here, right? So again, what is a high probability setup? Well, the high probability setup is always when there is liquidity in between the sub and minor structure, or between the microstructure. So again, I just want to iterate here that here is your microstructure. Above it would be, right, if we're wanting to be one structure away from microstructure, we would have to wait for supply, for the sub and minor structure to create. That means the sub and minor high is here, right? We're going to wait for prices to come in, mitigate this major structure, right? So once this happens again, right, price comes down, right, then we're waiting for more sub and minor structure to create, right, for price to come in to mitigate here, to continue. Now, it's not going to happen like this all the time, but I just wanted you guys to understand that these are the high probability setups. Now I'm going to show you guys here on another diagram here, right here. Okay, now there's only two structures happening here. Nothing is picture perfect, but I'm going to show you so you can understand it just a little bit better. Right here you can see we have microstructure. Okay, price comes and sweeps everything, right, creating sub low to sub high, right, just like that, which means that if we're looking to enter, right, now there's no structure in between this low and this high, which means that this is the next structure low for us to continue bullish, right? So if we're following order flow and price is going bullish, we're only looking at where the next sub low is, not where the next micro low is. Well, I'll show you guys in this other example here, okay? So right here, when you enter off of the demand zone, you can see that there's higher highs and higher lows happening here. This is considered microstructure. Price sweeps the micro again, right? Because in order for us to continue bullish, we need some form of liquidity to continue bullish, right? That is the microstructure. Price pushes bullish again. Now, when we break and chalk the old high, what are we trying to do? Well, we're trying to find out where the next high probability setup is. Where's the next major sub low structure, right? That would be here. Now I'll tell you why, because this high here, right, internal structure, is liquidity, right? It is microstructure. This is all microstructure that will eventually get swept and come back to the major low. Now, in order to understand this, the substructure has had to take out a previous low, right, or a previous pretty much a previous low or previous high. That means this would be identified as a swing low, right? Again, here this would be, actually if we did this would also be another swing low. So you could say that when prices are coming back, right, or retracing, we're looking for a swing low, right? Because when price swept liquidity here, right, all this in here was unmitigated, which means price needs to get back to it, right? So once price runs again, notice where price gets back to another swing low, but not just any swing low, because microstructure can also have swing lows as well, right? But we have to differentiate that between micro and sub and minor. So this here would be another swing low, right? Sweeping liquidity from the left, right? Coming back to create this impulse again. So once we enter here again, okay, price runs up. What is price doing? It did take out liquidity, right, which means this is a new form of a swing low, which means this is our sub low. But anything between this low and this high is microstructure. Again, microstructure, right? So once microstructure is created, we anticipate that all this will be swept. Liquidity was swept again, mitigated here again at a sub low, which is a swing low, right? Price continues bullish, creating microstructure. Right, once price runs, right, it does whatever. You can see the microstructure creating again. So now the trick here is to find out again, where is the sub low? The sub low is actually here, because the sub low is the one that is bigger, right? You can see it's bigger, right, and it's one structure away from the microstructure. So which means this would be our demand zone right here. Boom. So you'd buy there to hit the next high. Okay, so this is how you find your structure, right? This is how you differentiate anything from micro to sub and minor to major. Now I'm going to take you guys to a live chart example, so we can talk about it. Okay, so let's look at this example here. You can see here that we have actually the three structures happening here. We have the major high, major low. Okay, that's one. Then we see the sub high and sub low. So in between the sub high, between the major high and between the major low, you can see that the sub high is here. We can see it creating in here, right here, right? So here's one, two, right? And then we wait for other for the others to come in here, right, for the sell, right? Something like this, right? So that's our major high, major low in red dots. Black dots would signify sub and minor structure, right? Okay, so you can see all that, right? So microstructure is here. Okay, so you guys might be wondering, well, what about this gray dot right here? This microstructure here? This microstructure sharing a low with the major structure because everything is interconnected with each other, right? So you can see that major high is in the red, black is in sub and minor structure, and then the micro is the gray dots. Gray dots is because you can see that these areas here have not come to connect with the sub high here, which means that whenever we're looking to trade the substructure, right, you can wait for prices to get back to this, right? That's my supply zone right there. Okay, so in return, we would wait for price to retrace into the supply. I always do about 50% of the way, enter up to 50, sell that, right? And vice versa. If we're going bullish, you can see that here, right? You can see that there's small structure here. That is microstructure. Microstructure swept, sub and minor here is being mitigated to continue bullish, right? We're being one structure away. Here's another one right there. Here's also another one, because you can see internally, when there's internal structure like this, you can see all these little lows here, that's micro. All this is micro right here. Now this is sub low to sub high, sub low to sub high. You can also see here, we've also made this is the next sub low. Right here would be the next sub low to sub high, because between this low and this high, you can see that there's a lot of major structure going on, a lot of microstructure going on.